program today, we intend to analyze some of the economic reforms of the current administration led by President Bola Tinubu. And in the studio this morning, we have joining us the immediate past Director General of the Lagos Chamber of Commerce and Industry, LCCI, and who is currently the founder and CEO of the Center for the Promotion of Private Enterprise, CPPE, an NGO committed to the ideals of free enterprise and private sector development. In the studio this morning, Dr. Muda Yusuf, thank you for being here with us on the program. And joining us via Zoom this morning is the Director of Research and Strategy, Chapel Hill Demham, Tajudeen Ibrahim. Thank you also for joining us on the program today.
Thank you for having me on the show.
Right. All right. Let's begin with Mr. Muda Yusuf, who is in the studio here with us. Mr. Yusuf, if we'd like to take a brief recap into this administration's many reforms last year, what stood out for you?
Well, the flagship reforms actually were around the fuel subsidy removal, which is all about energy sector reform, the policy reform. Then, of course, we have the tax reform, which is still in the works. You know, I think basically, as far as reforms are concerned, those are the three major reforms. And the reforms have had very significant implications, both for businesses and for, for the citizens. Right. Of course, it has been very challenging because typically, most of these reforms comes with a lot of costs, economic costs, social costs, and sometimes even political costs. So these were the major challenges we faced in 2024. But again, let me say also that those reforms were necessary, to pull the economy back from the brink. Painful as they were, I think they were something that we needed to stop the bleeding of the economy, particularly from the foreign exchange perspective and from the fuel subsidy perspective. Okay. So we are hoping that going forward, things will begin to stabilize. Right. Because what happened in 2024 was essentially about laying a foundation, on which you can now begin to build on further improvements in the economy. Okay. So it was very challenging, right, but it was something that was necessary. Yeah.
All right. I'm sure that I would also like to take your perspective on that, Mr. Ibrahim. For you, do you agree totally with Mr. Yusuf's submission? And if you don't, what were some of your high points for 2024?
Yes, I completely agree with him. The reality is that all of those reforms were necessary, and Nigeria really needed to embark on those reforms, because the benefits of those reforms would not be immediate, just like all of us in the country are saying it. But the reality to my mind is that if we take a long-term view at those reforms, you would realize that the benefits to the country is enormous, and we can at some point begin to feel the positive impact of those reforms. In addition to those three, there are some other maybe possibly smaller form of reforms, like those in the oil and gas sector, for instance, where the president signed executive orders. Those executive orders, had largely speaking encouraged investment in the oil and gas space. Okay. And we noticed, for instance, the transaction between Seplat and ExxonMobil, also the Renaissance, deal, where assets, were sold in the oil and gas sector to local operators in Nigeria. So on the back of that, for instance, we expect that decision to lead to an increase in investment flows into the oil and gas, sector. If we still stay in the oil and gas sector, there is another major development that I believe, is going to be, instrumental to further improvement in the architecture of the Nigerian economy in terms of the oil and gas space, particularly speaking to PMS. And in this regard, I'm talking about the decision of the government to allow local refineries to buy crude oil in Naira. Yes, it is going to save us not less than $7 billion per annum. That is the number published by the government. But I have also seen a more compelling number, which is $20 billion, which is what we spent as a country to import oil-related products into Nigeria. So if we can deal with all of those elements locally, we can save a lot, and it is on the back of all of these reforms.
Right.
All right, Dr. Yusuf, looking at the timing of some of these reforms, when you look at the cost implication of some of these reforms, as well as the pains that Nigerians have to go through, would you say that the timing was right? And these reforms, are they the catalyst that we need to actually transform the economy going forward in 2025?
You see, for this kind of reforms, there is perhaps no perfect time for it. You know, it's something, because if you look at our economic history, these are reforms that have been contemplated by previous administrations. Right. But because there was this challenge, there wasn't that political will, you know, to take the risk, you know, to push through those reforms, which is what distinguished the current administration from the previous administration. You know, the ability and the capacity to take that risk, you know, notwithstanding the cost, particularly from the political point of view. So it was the timing. We cannot say that the timing was wrong, because just as I said earlier, we had an economic structure that was bleeding from so many sides. And in order to stop the bleeding, you have to take those steps. It's like you have fire burning in a particular environment. Before you do anything, you quickly have to put off the fire before you begin to address some fundamental issues. I think that is what has happened. But what I think could have been done differently is to, you know, address more urgently the social effect of those reforms. I think that is where we have an issue. And that is where some of us feel that we are leaving a lot of people behind. Because if you are undertaking a reform, you need to bring as many people on board as possible. Apart from sensitizing the citizens, you need to address specifically, deliberately and urgently, the implications, particularly for the vulnerable segments of the society. We haven't done much of that. You know, some of the policies that were put in place to alleviate all some of these costs, it has not been impactful. So we need, going forward, to look at those social implications, particularly with respect to the cost of living. We talk about the cost of food, cost of transportation, cost of medication. Those things are very basic, you know, to the citizens. So we need to see a lot more actions at all levels of government, the federal, the states, and the local government, to address those issues specifically. If we need to think out of the box to achieve that, we should do so, which is one of the things that the president did when he announced a waiver on import duty on some food items. But unfortunately, again, we had implementation problems. Some of these policies were announced in June, some were announced in July. We didn't see implementation until around November, December. So the impact is not even really there. It's not really there. So going forward, I think we need to focus a lot more. While we address the issue of the reform, we need to also simultaneously deal with the social consequences of those reforms, so that we are not leaving too many people behind. Because it's a democracy. You need people to come on board. You need people to support you to be able to achieve the desired outcome.
Right. Tajudeen, one of the social implications of what Dr. Yusuf has talked about will probably be the inflation rate. And at the moment, he also did mention cost of living. Purchasing power of Nigerians has reduced drastically. And if we were to go by during the New Year message of Mr. President, where he talked about the intention of this administration to reduce inflation rates to about 15%, is that a tall order, or do you see that really happening around the myriads of reforms that this administration is currently embarking on?
So my view is that it is unlikely that Nigeria sees an inflation rate of 15% next year. because of a lot of factors. Number one of such factors is that we still have a situation where we have insecurity in major food, producing regions of Nigeria. And we still have a situation where we have, FX rates, exchange rate in this case, being on the very high side at around 1,500, 1,600 level. So with those two elements, for instance, it is unlikely, that we see, inflation rate of 15%. But what I believe is possible is that we have what we call high base effect. Last year, for instance, we have the consumer price index, which is used to measure inflation. We had it being at record high level. So this year, for example, the fact that it was very high last year can provide a high base effect, for inflation rates, and then we'll begin to see inflation rates pretty much lower in the coming months. It does not necessarily mean that the government has done anything special. What it means is just that the numbers are aligning to the highs and the lows. But what I believe the government can do is to address all of the legacy issues around, the drivers of inflation. And I believe, insecurity is one major thing that has to be fully addressed. The second thing that has to be addressed is also exchange rates. Let us have, stable exchange rates. If that is achieved, I think, we can be talking about much lower inflation rates. But I reckon that, that 15% looks more like 2026 number in terms of, it materializing, and not so much of this yet.
Okay, Dr. Yusuf, I wanted to speak to what Tajudeen just said now, that ambitious figure of 15% as regards the inflation rate. And side by side with the sectoral growth that we had in 2024, which were the sectors that stood out for you, and how can we consolidate on them moving forward in 2025?
Well, the issue about the government aspiration concerning inflation rate, I think it's been overflogged, really.
Okay.
I don't think it's such a big issue. As far as I'm concerned, it's an aspiration. And the entire budget itself are projections. So if you have an aspiration that looks somehow ambitious, well, let it be. Let us see how far we go. And just as Tajudeen said, what is important is to look at the key drivers and see how we can bring them down. He talked about issues of the forex, which is very critical, and we are making some progress in that respect. He talked about issues of insecurity. Again, very critical is also the issue of energy, because transportation cost is also a major component of this inflation. Because if you talk to those who are in the food production sector, they will tell you that one of the biggest challenges they have is the high cost of transportation, and that is related in a way to the cost of energy. And luckily, we're also seeing some progress with respect to the downstream sector, particularly with respect to domestic refining of petroleum products. So if the government is able to also support those who are in production, the Dangote refinery, the Port Harcourt and the rest of them, if they are supported enough, and there's a deliberate steps to ensure that the prices of energy also comes down.
Right.
Because energy, you need energy to power an economy. If you need to give some support, tax waivers, import duty waivers, fiscal policy supports, not necessarily heavy subsidy in the energy area, that is very critical to bringing down the cost of production. Because if you talk to most of those in production sector, they complain a lot about high cost of energy. And the high electricity tariff is also not helping matters. And you need production to drive down these prices. So for me, the debate should not be so much about whether it's 15%. The debate is about how to bring down this cost. Because for the citizens, they are not just looking at high inflation coming down. They are looking at reduction in the prices. Prices are already very high. Because inflation, by definition, is reduction in the rate of increase. So when you are talking about whether 15% or 10%, you are still expecting that prices will go up. That is what it means. But for the average citizen, they are looking at prices coming down, just as we are beginning to see with the PMS.
Right.
We want to see more of that with diesel. Diesel is very critical to production. If you talk to the average people, either in bakery, in hotels, in supermarkets, they will tell you how much of their resources is being drained into the cost of diesel. So these things are very critical. Coming to the issue of the sectoral issue, what we have seen is that because of the structural challenges in the economy, the service sector of the economy seems to be doing far better than the real sector of the economy. And when I talk about real sector, I'm talking about those sectors that are involved in production. And those sectors, that some of them that are also involved in services, who have responsibility to mobilize factors of production, labor, raw materials, and all of that to be able to deliver one kind of value or the other, to their customers. So, but when you look at sectors like even telcos, like financial services, for instance, one of the biggest issues some of us have is the disconnect between the financial services sector and the real economy. Because if you look at the Q3 numbers, for instance, the financial services sector posted a growth rate of about 32%. The real sector, agriculture, posted about 1.1%. Manufacturing posted 0.95%. The trade sector also around 1%. So the critical sector that are actually generating employment are not doing very well.
Right.
And you can understand. Interest rate is over 30%, 35%. So what business do you want to do that will give you a return of close to 30%?
Right.
Taking into account all these macroeconomic headwinds, the structural issues, the port issues, the tariff, the taxes, the challenges are enormous. So we need to find a way going forward to bridge that disparity between the service sector and the real sector. The real sector is very, very critical. We are talking about exports, we are talking about job creation. These things will come from the real sector.
Okay.
And if you don't have the right kind of policy mix to deal with that will not help. And we don't also want to see this continuous tightening of monetary policy. You cannot continue to tighten monetary policy. Now, CRR is at 50%. MPR is at 27.5%.
Yeah,
so these are a whole lot of pressures that we need to address going forward.
Right. I mean, Tajudeen, from what Dr. Yusuf said, it was going to point me to issues around monetary policies and monetary and fiscal policies of the CBN. And we know that last year alone, even many had thought that the CPR was going to be reduced. But the last time the CBN had its MPR meeting, interest rates were again, increased. And so if you take a look at the fiscal and monetary policies of the CBN, how much is the CBN doing in those regards at addressing some of these critical sectors of the Nigerian economy?
I think there's a limit to what the CBN can do, honestly speaking. If we consider that the CBN is the monetary authority of the country, and there's a limit, because what the fiscal authority, which is the government, has to do, the central bank cannot do it. So it is limited in that regard. Okay. But if we look at the high interest rates and the monetary policy rate, for instance, being over 27%, there is need, for the CBN to do what it has done, because the mandate of the central bank is to ensure price stability. And there is no way you can ensure price stability if you do not implement the right strategy, to ensure that, you have, stability in the prices of goods and services. Inflation is one major monster that the central bank really fought last year. It was on the back of that they raised the monetary policy rate by 875 basis points, which is even higher than the 640 basis point increase that we saw on inflation rates in 2024, which means the CBN was really firing on all cylinders to ensure that it was able to bring down inflation. But the question is, did we have lower inflation because of the elevated interest rates? The answer is no. So what that means is that there are other elements for consideration. The only thing that the CBN can do is to raise interest rates to address the demand pull portion of inflation, and also to encourage foreign investors to bring in their US dollars or their foreign currency into the Nigerian market via the foreign portfolio investment window. So just so that we have, relatively speaking, stable exchange rates. All of those elements materialized, but we did not see lower inflation. What that implies is that the government has to be deliberate around ensuring that it is able to bring down inflation via implementation of the right policies. And I talked about one of those policies earlier, which is around ensuring that there is security, adequate security in food-producing regions of the country. Right. There is no farmer that will go to farm and produce and sell to the market where there is no security, on such farms. And the little that they are able to produce, they will do either of two things. They will either sell at significantly higher prices, or they will sell to other countries, because we now have much weaker currency relative to, for instance, even the CFA, for example. So we need that to be addressed. Bear in mind also, Nigeria has the highest food inflation rate in Africa. And that is one thing that the government must look into, by either in importing food to ensure we have much lower prices, or ensuring that our farmers locally are able to produce, and then we have much higher output that can lead to either price stability, or even more interestingly, lead to lower food prices. So the monetary authority, to my view, is doing its best, and there is nothing more that they can do. It is lying more on the fiscal authority, which is the government in this case, to address all of those issues.
Right. Okay, my next question will be for the two of you, and that's about tax. We all know that tax is very germane to economic growth, and we have the tax reform bill before members of the National Assembly. Of course, it has generated different kind of reactions from different parts of the country. How germane is this tax reform to the revenue drive generation of the federal government in 2025?
Dr. Yusuf?
Well, the tax reform is something that is very, very important. It's something that will be very beneficial to the economy from the point of view of the efficiency of tax administration. Because if we improve efficiency, you will improve revenue generation. And of course, you had the Lagos example. We saw what the impact that efficiency and the leveraging of technology had done to revenue generation in Lagos State. That's a very good example. So I think that is what is being replicated at the federal level, to ensure that some of these leakages in taxes, some of these obsolete tax laws are removed. So it's something that is very, very good, that needs to be supported. But what I will caution against is to ensure that we don't allow politics to creep into the whole conversation. Right. I think it was a kind of misstep for the tax committee to get involved in issues of revenue allocation. The committee should have been focused purely on issues of tax administration, tax reform. That is its core mandate. The idea of now veering into how the things should be shared and not, has created a whole lot of political problem. Because revenue allocation is a political issue. Issues of tax reform is an economic issue. Right. We should have partitioned it and not just get involved in issues of allocation. Because of all the provisions, I mean, we are talking about 2 or 3 controversial provisions. And look at the kind of challenges it is now creating for the entire tax reform bill. So going forward, I think the politically sensitive and emotive portion of it, we should just drop it and focus on the purely economic components of those reforms. And so that we can move forward. The political issue, we can now find a way to build political consensus around those things. And we should leave that to the politicians to deal with.
Tajudeen.
I completely agree with Dr. Muda on that. And I think if we look at the economic aspect of it, and also, taking a look at the economic benefits that higher tax, revenue is going to deliver to us in Nigeria as a country. Number one, it will lead to higher.
Okay. We might have to reconnect with Tajudeen in a bit here. Okay, I think he's still there.
Deficit. Much lower deficit when we look at government, budget. And when you have much lower deficit, it means the government would have much lower, borrowings. And when you have much lower borrowings as a government, that will also lead to the much lower interest rate that all of us are calling for. Interest rate will not fall magically. It will fall only if policies and decisions are directed towards it and implemented. So the tax reform, that we're talking about here has a big implication for us as an economy, because ultimately speaking, it will lead to much lower interest rates, and it will be beneficial to all of the sectors of the Nigerian economy, because everybody, every sector will be able to borrow at much lower interest rates. When you borrow at much lower interest rates, you can accelerate the growth of your output. When you accelerate the growth of your output, you can, of course, sell at much lower prices, because you now have a lot to supply to the market. So I believe that, the political side should be dropped, and also, the focus on the economic aspect and the economic benefits should be, focused on, and ensure that, they deliver it to Nigerians as a whole.
All right. We'll have to allow Tajudeen go now. Thank you so much, Tajudeen Ibrahim, for joining the conversation this morning. He's the Director of Research and Strategy, Chapel Hill, Demham. Thank you so much for contributing on the program today.
Thank you for having me.
Right. Of course, we still have Dr. Yusuf in the studio this morning. Let's quickly take a look into the outlook for 2025. I know you mentioned a few areas that you expect government to consolidate on this year. You did mention energy as one of the sectors that you think that government needs to consolidate on in 2025. Aside energy, what are some of the areas that you also would like for consolidation on, especially if we also go by what Tajudeen suggested earlier, the need for government to also support agriculture a great deal in 2025. What are your suggestions?
Before I come to that, let me quickly talk about this tax revenue thing. Okay. Because the fact that government has more revenue is not a guarantee that it will benefit the people. So that connection is extremely very important. Okay. Because we know that there is a correlation between the level of corruption and the amount of revenue available for government to spend. So please, we need to also appeal to all governments at all levels, okay, that additional revenue that will accrue, they should allow it to cascade down. The benefits should trickle down to the ordinary citizens by addressing their very basic needs, which we highlighted earlier. Right. We talk about food, we talk about education, we talk about public transportation, we talk about health. Right. All those things are critical. So those additional revenue is not for people to go and be setting up airlines or building airports or buying SUVs or building new secretariat and so on. It's something that should come down to benefit the people. Right. Because the reform has imposed a kind of tax on the people. So if you are getting the people to sacrifice more, then the benefits, they should get something back. Okay. And all governments should be deliberate about that. Now, talking about the outlook, first of all, let me say that we are on the right path, right, as far as some of the major reform objectives are concerned. So we need to sustain that. We are seeing a lot of benefits, a lot of stability now in the forex market. And seeing where we are coming from and where we are, I think we have made a lot of progress. Okay. So that reform must be sustained, and the CBN also needs to ensure that this periodic intervention in the forex market also needs to be sustained. Okay. Because we cannot afford to leave the economy entirely to the markets. in every economy, even in the U.S., which is the
yardstick for
the major
growth.
major issue. I mean, major drivers of free economy and free market. They still intervene, to ensure that the market doesn't go completely out of hand. So that periodic intervention is very important. Then making funds available at affordable costs.
Interest rate?
Interest rate is extremely very important. We cannot drive and grow the economy with an interest rate of 35%. That cannot work. So we need to have deliberate policy, possibly through the development finance institutions. We have the Bank of Agriculture, we have the BOI and all of that. Yes, Nexim and DBN, all of that, they need to be more supported from some of these benefits of the reform so that they are capitalized a lot more, and the conditions they give to businesses should also be a bit relaxed.
Right.
I'm happy that the president announced in his New Year message of a credit guarantee
scheme. Yes, he did.
Credit guarantee company. That is very critical, to reduce the risk of lending, to businesses. Because sometimes, even when these financial institutions have the money, the kind of condition they will give you, it makes it very, very difficult. So funding for businesses, for the private sector, is extremely important. Long-term fund, concessionary interest rates. Those things are very important. Of course, the government is doing a lot around insecurity. They are now using a lot more technology and all of that, and we hope that we'll be able to get more traction in that. The president in his media chat also talked about, mechanizing agriculture. Because we have a population of 230 million going to 250 million people. Hoes and cutlasses cannot feed us. And the farming population is aging. Not too many young people want to.
Are interested.
They are interested. You can't be a graduate and be guarding hoes and cutlasses. So application of technology to agriculture is extremely very important, which is part of the thing that the president said. He talked about 2,000 tractors that are coming in. But the subnationals have a bigger role to play as far as agriculture is concerned. They are closer to the farmers. They are the ones in charge of the land and all of that. So they need to do a lot of support, to those in farming, crop farming, livestock, poultry, all of that. They need a lot of support, And of course, issues of energy, we can't do industrialization without energy. So supporting our domestic energy producers is very important so that they can deliver energy at a much lower cost. So these are some of the things I think we need to ensure that we do going forward. But again, let me emphasize, the benefits of the reform should address the vulnerable segments. Cost of food, cost of transportation, cost of education, all those things need to be addressed going forward.
All right, so let's quickly look at the 2025 budget before we let you go this morning. Looking at the figure, and of course the breakdown of the figure into different sectors of the economy, if well implemented, what does it imply for Nigeria in 2025 economically?
You see, we need to manage expectations as far as the budget itself is concerned. The budget is about 50 trillion. The debt service component in the budget is about 15 trillion. If you take 15 trillion out of 50 trillion,
that's like a quarter.
You have taken away about 1/3 of it. So what we are left with is just about 35 trillion. So it's not as if that can deliver much. So, but looking at the priorities of the budget, they are good. The president has prioritized security. He has prioritized infrastructure, health, and all of that. That is good. So as far as the budget is concerned, I think we should expect something, but we have to manage expectation. And again, when you're looking at the budget of 50 trillion in an economy of about 250 trillion, it's not actually much. So the policy environment is key so that private sector capital can come in. The private sector could do a lot more in terms of powering the economy. Of course, government expenditure is important, especially for key infrastructures that the private sector cannot provide. Providing security, these things cost money. So those things are very key. But we have to be conscious of the fact that federal government budget alone cannot drive the economy. We need to be conscious of the fact for other subnationals, the local government, to also come on board to do
Before we allow you go this morning, I'm sure for the average Nigerian who's watching this morning and who's not confident that indeed the economy is making progress, because of course you are an economist, our guest also an economist, and so they are looking at things, like the layman that they are. What assurances are you giving them this morning that indeed there is progress?
Well, the assurances is that the reform is beginning to show indications of some positive outcomes.
Okay.
Look at the reduction in price of PMS. As little as it may look, it's very symbolic. It signals the fact that something positive is happening. So the government needs to continue on that trajectory. In the first half of last year, we were seeing exchange rates going to 1.7, 1.8, 1.9. Some people are predicting it will go to 2,000. But here we are around 1.5. And possibly, if things work well, given the fact that our reserves is now above 40 billion US dollars, these are positive signs. So I think things are looking forward, but as citizens, we need to also continuously engage our leaders so that they address fundamental issues of cost of living. The fact that the macro indicators are looking good does not immediately translate to improvement in the cost of living. So there has to be deliberate efforts to ensure that we bring down the cost of living by supporting those who are, driving the production of staple food. Things like cooking gas, things like bread, flour, noodles, sugar, those basic things.
Everyday living.
Everyday living.
Right.
Those things are very important.
All right. We'll have to leave this conversation here this morning. Thank you so much, Dr. Muda Yusuf, founder, director, CEO, Center for Promotion of Private Enterprise. We appreciate your thoughts on the program.
Thank you very much. Thank you.
All right, that's the much we'll take on this side of the divide today. We'll take a quick break. When we return, it will be the turn of our Debimpe to take you through her conversation today.
The views expressed on this program do not represent that of the producer, management of Lagos Television, or the Lagos State Government. They remain the perspectives of those expressing them. Thank you for staying with Lagos Television.